As politics shift and ESG debates rage on, the smart money is telling a different story. Impact investing has hit $1.6 trillion, while water investments surge and sustainability is quietly reshaping everything from bond investing to AI-powered demand. So, let's take a look at how the sustainability playbook is being rewritten right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. I'm Anthony Pastore. Thank you so much for joining us. Happy New Year. So today I'm joined in the studio by two of my Chief Investment Office colleagues, Andrew Lee and Tiffany Agard, both members of the Sustainable and Impact Investing team. Great to have you both here. Great way to kick off the new year, talking about sustainability for the year ahead and beyond as well. Today, I know we're going to focus on a couple of the specific expectations for SI in the new year. There are 10 in total, so we'll probably get to around 4 of them today. So Andrew, let me start with you. First of all, great to see you. And when you look towards, now we're sitting in January, we've got a long road ahead of us. What are the main ideas that investors should be considering when they're thinking about sustainable investing this year?
So our CEO overall base case is for continued economic growth across regions. There will obviously be differentiations across the different regions, but we expect to see continued economic growth. We also expect to see central banks cutting interest rates on a go-forward basis, although not at the pace that we saw in 2024. And we do expect sustainability to remain a key trend that investors are going to continue to incorporate into their overall portfolios and the portfolio construction, whether that's through implicit sustainability labeled solutions, or whether it's implicit in terms of the risks and the opportunities and the themes that they're really thinking about. But regardless of the rhetoric, we think that's going to continue to be a key theme.
Excellent. Tiffany, welcome. And I'll sort of pose the same question to you, and kind of building on what Andrew's talking about. What are some of the themes that you're focusing on for sustainable investing this year?
Yeah, thanks so much. When we think around sustainable investing and we're thinking around how that fits into the broader CIO view, we really see fixed income yields as being appealing during this upcoming year. And that's going to be great for sustainable investors who are looking at green bonds, social bonds, sustainable bonds, and multilateral development bank bonds. So those are great opportunities there. When we're thinking about equities, we definitely see there's more room to grow. And we see a lot of that growth coming outside of just technology. So that can lean into financials, utilities. And with that, we see opportunities in some of the ESG leader strategies that we have.
Great.
I mean, just maybe building on technology a little bit. You mentioned technology. AI is obviously a big theme where CIO has a call on. We also have a big call out on power and resources. They're related, right? Obviously, AI drives demand for energy. And so these are areas where we think that there are opportunities from a sustainability perspective to pick bottom-up fundamental winners. So interesting opportunities, further within the equity space and also within some of our key themes.
Yeah, and it's one of those topics that's come up a lot in the last few months, back in 2024. As we all know, the AI story has just really grown and grown. And then, of course, with that comes the environmental impact of the water usage and energy usage. And so sustainability is going to really play a very important role in making sure that we're not just, using all the water and all the energy irresponsibly, since AI is just going to get more and more powerful over the next, couple of years. I want to kind of go back to what you were talking about there, Tiffany, with yields, because it has really been an interesting time for bonds. And of course, as Andrew mentioned, we are expecting the Fed to continue to cut rates, maybe not at the pace that we expected last year, but some cuts this year. And I'm looking at a chart that we're going to pull up here talking about green bond issuance. And we're looking at 2024, kind of a buildup of green bonds since 2021. It fell in 22 and 23. Now it was back up again in 2024. So what are expectations for green bond issuance given the charts and what we've already seen?
Yeah, definitely. I mean, we think that space is really going to continue to grow, primarily led by sovereigns and multilateral institutions. So we think mainly on the U.S. corporate side and the municipal side, there's going to be less issuance. And then ultimately that leads to more of a focus on euro-denominated bonds versus U.S. dollar bonds. So that's sort of how we're thinking around the opportunities within the green bond space going forward.
Yeah. I think that what that means from an investment portfolio perspective is you can have sustainability-focused portfolios, you can have regular way portfolios, but they can include a replacement for high-grade investment-grade bonds in diversified portfolios of green, social, sustainable, and sustainability-linked bonds that deliver the same types of returns from a risk-adjusted standpoint, and yet have use of proceeds that are funding sustainable outcomes.
Right. And thank you for saying the word diversity or diversify, because one of the things, as we all know, being UBS employees and talking to our clients and our financial advisors, is diversified portfolios really are what we recommend, just because you want to make sure you're hedging yourself against upside, downside, rate changes, et cetera, and shifts in the way that people are investing. So let me just ask you then, Andrew, staying with you, we're seeing a shift globally politically. And I think a lot of folks, although we try to take politics out of investing, they sort of start to equate sustainable investing and ESG with politics. And so I know that's been something that we've talked about a lot. But taking sort of like the political ideals out with the investing side of your portfolio, obviously we say don't invest with, don't vote on with your portfolio, vote with at the ballot box, right? So given that, is there anything that you're thinking about when it comes to some of these shifts globally, politically, that might impact sustainable investing?
Sure. I mean, look, what governments do matter, right?
Yeah.
Whether it's government action, government policy, spending, the regulatory frameworks that need to be in place, those are important things for any types of initiatives to actually get traction and start to accelerate. And so, thinking about what's in place there, it is important. And so, but what's important to note is that by and large, we think that it's economic rationale and the fundamentals and what's good for job creation and companies and the economy and people that ultimately is going to trump any other motivations. And so, across the globe, we think about in the U.S., the Inflation Reduction Act. We think that there's not going to be a major repeal of the major components there because the benefits for stakeholders across different political persuasions are there, and so that's going to drive that continued support.
Yeah.
We think in Europe, the Green Deal, we're going to have to monitor what happens with the German elections and what the impact could be there, but we think that the motivation is there, the recognition of real risk is there, and so that should provide continued support. And look, in Japan, you've got $1 trillion green transformation GX plan, which supports decarbonization and energy transition initiatives.
Right.
So I think regardless of what the rhetoric might be, you've got economic motivations that will be in place that should provide the backdrop.
And you can see it in the chart. Sorry, Tiffany, I knew you were going to jump in there, but how it's, you could see from 2024 to 2014, that last column to the right is supporting economy-wide transitions, which you just talked about. I mean, those numbers don't lie. Yeah.
I was going to say there's definitely a lot of good movement in the space. We do also want to be mindful that there's the opportunity for some delays or shifts when we think around maybe loosening of specific environmental regulations in the U.S., whether it's how the EU sustainable agricultural policy rolls out and things around electric vehicle implementation and support for those types of tools that can help for decarbonization. It's definitely something that we want to be mindful of because there's opportunities for that to sort of encounter a couple of obstacles that may not lead to as quick of a progress as we would like.
Right, certainly something to keep in mind. Yeah, I'm glad you said that. But let's just sort of round it out here with the idea of the impact investing side of the component, or component of the investing side. How do you see investors engaging with impact this year?
Yeah, so I mean, we think investors are still going to be very focused on impact, particularly looking at it from transparency, data quality, but also really thinking about the real world outcomes. So how are those dollars creating incremental, impactful change in the world that we see today? And so investors are thinking around, what are the different opportunities in private markets? Are there opportunities, whether it's in VC, whether it's in different types of assets, and how to potentially move capital through there? And I think, one of the things that you started with earlier is the fact that there's $1.6 trillion deployed into impact investing. And that is not going to change. That's not going to go away. And as more opportunities come up, people are going to be looking to deploy their capital towards there.
Yeah. Was that a surprising number? 1.6 trillion. Was that in any of the models?
It's grown a lot.
Yeah.
Absolutely.
And I think it's really reflective of investors, shifting their interest to like, where's the real world change? I think it's along the lines of, in a portfolio, do I care if I'm reducing the emissions in my portfolio, but they're actually still there in the real world? Or can I use my capital to earn returns and also contribute to that decarbonization of real world emissions, so the real world change? I think that's what people are really focused on. So with a lot of our most knowledgeable investors in this space, we see that shift, an increase in looking for impact opportunities in their investment portfolios.
It's incredible, and I know that some of the demographics and the studies have shown that as the younger generations become investors, they're really investing with what matters to them, and they're even influencing some of their older parents, grandparents, et cetera, when they're sitting down and talking about their values, they kind of put into their mix, hey, listen, I want to make sure I'm investing responsibly. So it's really cool to see that shift happening.
And the set of investment opportunities that can generate returns and achieve those goals continues to grow.
That's right. Great. Good to see you both.
Thanks.
And also, by the way, a lot of this and more is covered in the latest Sustainable Investing Perspective. Some of you may be actually clicking on the link to view this video from that report. But if you didn't do that and you're watching the video as a standalone, check it out at ubs.com/views. It's a monthly publication that Andrew Tiffany and the team put together, so take a look at that. And also make sure to follow UBS on social media. We're on all the major channels, including Instagram. You can follow us at UBS Trending for all the UBS Studios content that you're not going to find anywhere else. And as always, if you have any questions about what we spoke about today, make sure you're having a conversation with your financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.